Just a few months after the coronavirus stock market crash, the Nasdaq composite climbed to record highs as the market made a historic recovery. While the pandemic has benefited tech companies with new consumer trends in the work from home and e commerce space, real economy stocks, including travel, energy, and traditional retail, have been struggling to make meaningful gains. Joining us today to talk about the divergence between real economy and quote unquote new economy stocks is IBD News editor Ed Carson. Now, Ed, a lot of investors found refuge in these coronavirus friendly plays like tech stocks when the market started to come under pressure. What have you been kind of seeing as the market's recovering? How are these stocks breaking down and what is the outlook looking like?
Yeah, we have, I would say, like three different kind of classes of stocks in this kind of market. We have what I would call the coronavirus plays, either stocks that are directly, boosted by the coronavirus, like a Zoom Video, Teladoc Health, or a lot of stocks that might be benefiting or at least hanging or doing relatively well in this environment, Microsoft, Nvidia. Then you have, stocks that are like recovery plays, growth stocks before the coronavirus, and as the economy comes back, you're seeing, those stocks doing well, like a Tesla RH. They need the economy to do well, but they had real growth beforehand. And then finally, we have probably another set of real economy stocks that weren't doing real well beforehand. And obviously, with the economy in recession, they're still struggling. And that would be airlines, energy companies, a lot of banks. And so obviously, those are the kind of sectors that investors, investors should be looking at going forward because, these coronavirus plays, some of them may be getting a little tired. But those in the recovery growth stocks, those are still the ones to be looking at, probably not the ones that are, really beaten down.
Right. And just kind of, looking in at kind of that first group you mentioned, like Zoom, like Teladoc, a lot of these software companies, no doubt got a boon from this work from home trend. All of our habits are changing. A lot of us are transitioning out of the office to working at home. What are you seeing developing there in that sector?
Well, I mean, obviously in some situations like Zoom, Teladoc, I think there's going to be some real permanent changes. I mean, like maybe growth has been sped up years ahead. People aren't going to stop using Zoom. I mean, maybe people will go back into the office, but maybe people will go like, I'm going to work from home once or twice a week. And I think, that a lot of those will be semi-permanent. And so that'll be a situation that I think those stocks will do well. So that'll feed all that cloud software. And that's one reason why they're doing well. The earnings held up reasonably well, and I think people see there's going to be demand for these products for a long time.
Right. And you had even mentioned, there's this whole other group of stocks that have really seen growth during the recovery. You mentioned Tesla, which they just continue to outpace expectations. You have Restoration Hardware. What are going to be the challenges moving forward? Because it's not like coronavirus is completely over. We're seeing this renewed outbreak. So, what should investors be looking for as we navigate through this?
Well, obviously, you need to take your cue from the market. I mean, the market is trying to gauge, is the economy going to recover? And look, the ultimate silver bullet is we're going to get a coronavirus vaccine. If we don't get that, if some of these vaccines don't work out and it turns out like it's not early 2021, it's the end of 2021 or later, then all of a sudden, all these expectations about the economy are going to falter. But, right now, it's like not just those stocks. We're seeing Lululemon, a lot of home builders, a lot of these stocks that you start seeing, I think the economy is going to be okay going forward. And that's what's been driving these stocks.
No, and like you said, a lot of these stocks are recovering. We've seen even before all this, some of these real economy stocks like travel, like energy, were struggling. When will they start to be doing well in this economy?
Yeah, I mean, obviously they're just having, some of these sectors are having horrific times, and obviously travel in particular. The question is, why would you think that the demand is going to really come back? Yes, eventually airline stocks, airline companies are going to see more travel, but that might take years. I mean, just the amount of losses that they're suffering is just enormous. While some retailers are doing well, like it's not like people are going to, and why would people be thinking, well, Macy's is going to have this huge rebound? I mean, they were already struggling. This seems to be accelerating a shift to e-commerce. Yes, they'll get a bounce from where they were, but where they are is so bad. And it's not clear that they're going to bounce back into something successful. So, as for investors, yes, some of them may bounce, but you don't know where. I mean, we saw that in early June, there was a bunch of these stocks that bounced. Oh, here we come. And then they just rolled right over again. Chances are it's going to take years for some of these sectors to come back, if at all. We may see a number of these companies just go away, quite honestly.
Yeah, no, it's a very sad reality in this current environment. But as we mentioned, the tech sector has kind of been this bright spot, this safe place for investors. Some of these stocks have been doing gangbusters. Um, but can these stocks maintain this momentum if the overall economy kind of remains in this prolonged downtrend, or just this limbo area, since we don't really know what's going to happen with coronavirus in the near future?
Yeah, I mean, absent of a handful of stocks like grocery stores or Zoom Video might still thrive if in this kind of shutdown kind of environment. But even for most of these stocks, you really need to see the economy get going again. We've priced in a lot of future growth with the economy doing terrible. And so if the economy doesn't pick up, it's not going to do great. It is a positive sign that we're seeing some of these recovery stocks, the Teslas, the home builders, and those kind of things. It suggests that people are feeling more confident in that, but we'll see if that turns out. I mean, the market's always reevaluating this, and we'll see if the economy bounces back. And if it doesn't, look, I mean, the stock market has had an amazing run, but ultimately it's profits drive stocks, or the expectations for profits drive stocks. And if those don't come out in the coming years, well, the stocks aren't going to hold up.
Well, Ed, thank you so much for your insights today.
Thank you. Thank you very much for having me.
And for more news and stock market analysis, you can click on over to investors.com. For Investors Business Daily, I'm Alexis Garcia.